Hey, okay, I just gotta get this off my chest. There is a real dilemma that I see with folks that are getting started in land investing, and I wanna just clear the air. I wanna make it really, really easy for you. If you can address this one thing in your land investing business, you're gonna be a cut above the rest. So let's dive in. Hey guys, this is Sumner Healey from landinvestor.co. If you're new here, we help folks scale 6 and 7 figure land investing businesses. We've got lots of good stuff down for you in the description if you guys are curious about learning more. But I wanna address something that I see as the elephant in the room that's really holding a lot of people back when they're getting started in land investing. And this is something that I've seen with a lot of students that have gone through our program. They just kind of are bashing their head up against their desk, trying to figure out market selection. And market selection is one of those things that I feel like actually doesn't get covered enough in terms of the content that's being produced out there in the world of land investing. Here's the reality is everything else you do in your business is going to be a downstream consequence from the markets that you decide to choose in. I always tell folks is like pretty much all of our costs in this business, they're not really variable. They're pretty much constant. Our cost of data is the same, cost of mail is the same, cost to send a text is the same, cost to make a cold call is the same. These are all the same. What's gonna really differentiate our results from others is what markets we decide to participate in. So there's 3 main things that we look at when we're going to select a market. And I've made it very, very tactical, very, very pragmatic for you. I'm a pretty pragmatic guy, so stick around for this video because you're not gonna wanna miss these 3 points. So the very, very, very first point here is we gotta make sure that we are actually working in a market that's aligned with our business model. There are many, many different subcategories or sub niches in the world of land investing. Something we cover in great length within our program is, hey, what kind of business do you want to build in the world of flipping land? And so you want to figure out, does this market actually align with what you're looking to sell, both in terms of an exit strategy, but also in terms of the subtype of land? Do you want to go after infill lots? Do you want to go after rural recreational? Do you want to go after commercial properties? Do you want to go make some subdivisions? Like, what do you want to do? Okay, figure that out, get really, really clear on it. That's gonna help distill your search criteria so you're not getting this paralysis by analysis being like, oh my God, I can't pick a market because I don't even know what I'm looking for here. So figure out what kind of business you're gonna build and then go and select markets that are aligned with that. The next thing that you need to figure out is what kind of business model do you wanna build? Do you wanna build a lower volume business or do you want to build a higher volume business? And this is really going to determine what direction you should go in terms of price points for the properties that are being listed in those markets. So if you want to go and do deals that exclusively net you 50K per deal, you got to go work in markets where land's selling for 200 grand, 250 grand regularly. If you're working in a market where there's 1 or 2 sales a year at that price point, what are the chances that you're going to get a property that's going to have that kind of spread for you? Very, very unlikely. As you go up market, the returns are going to be compressed from a percentage basis. And so you got to be comfortable going after higher ticket properties where you're deploying more capital in one go. But as a positive consequence, you're going to make more per deal. Or you want a higher volume business where you're doing more deals, but your actual kind of gross margin on those deals is smaller. Something you need to figure out. So you want to be, when you're looking at markets, you want to figure out, well, is this within the bracket of what I want to work in? For example, in our business, the bread and butter for us is properties that are between $25,000 and $75,000 as a list price. That's what we love. We love rural recreational. We love properties that fit within that window. So our search criteria becomes a whole heck of a lot easier because of it. Third point. Demand, one of the most important points here, right? Because our business is built around cash deals, doing big cash flips, in order to have that as an exit strategy, we need liquidity, we need real buyers in the market. So how do we determine that there's demand out there? How do we determine there's liquidity? 2 variables we look at. 1, the sell-through rate. So if there's 30 properties listed and 10 of them are selling a month, we can roughly say, hey, sell-through rate's about 30% out there. That's gonna help us to understand how much demand there is. 10 to 20% is phenomenal in terms of a percentage sell-through rate. The next thing we wanna see is how many properties are selling through on a monthly basis in terms of a total number. So we wanna see anywhere between ideally like 15 to 40 properties. These are hard, fast rules. They're not, you don't live and die by them, but this is going to be a good indicator that, hey, there is demand out here, there's something going on. And just as a caveat, one thing that I'll also look at is total supply, right? If I'm looking at a subdivision and there's 500 properties for sale, bit concerning. And you do see this time and time again. Go look at a subdivision in Florida, you'll see that pretty much the whole entire subdivision is for sale. So I typically want to be working in markets where there's just a little less supply. Again, I'm not gonna just disqualify a market because it doesn't check every single one of these boxes. So to recap here, we wanna go and find markets that fit our business model in terms of what kind of land we wanna go after. Then we wanna go and make sure that, hey, there's actually properties that are selling within the correct price range for us. That's gonna help us get to our average per deal. So if you wanna make 12 grand per deal, 20 grand per deal, You gotta go and figure out our property is selling at that price. A really easy rule of thumb is it should be double. So if you want to make 20 per deal, you want to see that deals are selling for like 40 or 50K out there. Just a hard, fast rule you can use. The third is there demand? We look at that in terms of the percentage sell-through rate, and there's the total quantity of deals selling on a monthly basis. And then kind of as a caveat, we'll go and look at the supply out there as well. So if you can solve this dilemma of market selection, it's going to make your business explode. It's just one very subtle tweak. It does not cost any more money to do this. It just takes time, it takes repetition, it takes doing it again and again and again and again. What some of you guys fail to realize is you are building a skill. Land investing is a skill, so get more reps of it. Just like anything else, a lot of times us getting good at something is just a matter of quality repetition. So hope this video was helpful for you guys. Solve the land investor's dilemma by getting great at market research. If you guys like this video, subscribe, give it a thumbs up. See you guys in the next one. Peace.